Hello guys, welcome to the Trading Parrot. In the last 2 days of 2024, we entered on a swing trade during the lows of 30 and 31st of December. We wanted to fill just the first order and the plan A ended up playing out, giving us a decent upside of 7%. So the question is, why has the price come to visit 99K? We're going to cover that. I want to talk about this breakdown that we are seeing on the 4-hour and what's the downside that's more likely to happen around here. I want to talk about the daily time frame, how healthy is this move and the potential I see for a reversal in terms of the momentum. We'll talk a little bit about CME, the closing price of Friday, and I'll give you an update on the weekly as well. And of course, we are going to cover all the data that we usually cover, liquidity pools, ask versus bid, the delta, and all of that as usual, which has been helping us in a great way to dodge the bullets. For example, we didn't take a short on the head and shoulder, we took a long instead. And here we are doing great. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Thanks so much, guys. Yesterday combined between my 40-minute catch-up video covering all different timeframes of Bitcoin and every single angle, which is a must watch for this weekend, if you ask me, together with the altcoin video where I cover pretty much all the top market cap on TA using the weekly and daily timeframes, we got almost 1,000 likes. So if you watch these videos over the weekend for the first time, give it a like and leave a comment on them. The algorithm is really punishing me for taking a few days off and kind of struggling to want to show the video to anybody. You wouldn't believe me. And the only people that can really help is you guys. The more loud you become in the comments and in the likes, the algorithm is gonna think that the content is worth watching. So thanks so much for that, and let's go into the content. So I'm gonna mention during this video a bunch of signs of warning, and that warning doesn't necessarily mean we're going to 70K or anything, but those are signs that we might see some sort of pullback where we are. And that is because we are hitting very close to 100K. That's a psychological level. And we cannot just expect that we go from pretty much 91.8, not having any swing low, cross 100 and go straight into 108K. Of course, sometimes it's doable, but most of the time Bitcoin cannot achieve that. So word of warning number 1 is leverage squeeze is giving us a sell signal. This is a word of warning, mild. I wouldn't take it as the end of the world, as I say, because sometimes it fails. As you can see in here, it failed this time. Some other times it triggers all the way up, telling us that there's too many longs about to get liquidated. We're going to cover other indicators that are going to allow us to see what's the magnitude in terms of the delta, liquidation levels, to see if really we should be taking this signal seriously. For example, in here, it was a great call. In here was a little bit too early. In here was spot on, but this one was terrible and this one was terrible too. So as you can see, I don't just action sell signals during a bull market, but I put them on the table and I see if we can challenge it and if it makes sense. At the moment, we are in the process of producing a bull cross on the MACD, which is great. We were anticipating this a few days ago. We said if we have this move creeping up towards 100K that we were expecting to see, we could potentially put a bull cross on the MACD, and that is slightly below the zero, so it still counts as a decent quality bull cross potentially, not like this one that we have in there above the zero line that ended up turning into a fake out. So hopefully this one won't be a fake out either, because if it is, then we are going to have 86.5 on the table coming from the CPR levels of January. We are here in the pivots, so December is not a virgin month in terms of CPR. And what the CPR is saying is that we already touched this resistance in December. Therefore, there is a likelihood that during January we touch at the very least 104.5. That is the first resistance of January. So far, things are looking good for achieving that, but as I say in the beginning of the video, making a move like this long without any pullback, given that this is 100K, I will expect at least to build some sort of bull flag or some move in here with a second attempt, but take that with a grain of salt still, because we need to look into further data. Remember that the next job in price action here for Bitcoin is to overcome the right shoulder. That is the second step towards invalidating fully the pattern and the final target of 75K. So far, we're creeping up towards that 100K. That was an order block as well. So there's multiple reasons to think that 100K is difficult to overcome. We're going to talk about the selling wall. Something really crazy happened since yesterday, and I'm going to show you later in the video as well. On the 4-hour, yesterday I was showing you on Telegram that the RSI broke out above the global resistance, and that was great news, but unfortunately, so far it has been playing out as a fake out. Let me show you. We pierced the level of 66, we got into 67.5, and then we came back down, and then we lost the support. And now we are at 59, and you can see that on the price action, there's also an ongoing battle against our support of 97.8, which we held 2 times in a row. And now on this candle, as I'm shooting the video, there is an ongoing battle between that level as a support and potentially turning into resistance in the next upcoming candles. That is what this is calling for. Just bear in mind that the 4-hour has been all over the place. So although now the chances are maybe slightly more skewed towards a move down, either halfway through to the median or to the global support, we don't know yet, but there's still maybe a 20 to 30% chances that this still break out in here and pushes slightly higher. And the reason for that, I'm going to give it to you immediately, which is we still have this red in here on the 100K, number one. And number two, the selling wall has been pulled out when the price was roughly at 98.87. And we were closing the CME gap at 99K. At that precise point, before the market closed on Friday, they decided to remove the selling wall of almost $200 million on Binance. Interestingly, now with the move down of the price, they're not putting it back. So as I said in yesterday's video, maybe this was just psychological. It hasn't been filled. The orders, they just pulled them out in a very similar way to what they did when we crossed 100K for the first time in history. At that point, the selling wall was 320 million, and they still pull it out. So many people seeing that selling wall being removed are gonna think, okay, so the sky is the limit now, we don't have any resistance at 100K. So I will say we still have that 20 to 30% chances that we do another attempt in here, just based on how attractive are all these liquidity levels there that are so close to the price. So you may be wondering, why are you saying just 20 to 30% to hit the 100K? And I just think this impulsive move has been slowing down towards 100K. They removed the selling wall. This liquidity is still there, but we have lost the momentum. So that has to take some off the table in terms of how strong is now the move to be able to overcome 100K. The closing price of CME was 99K. That is priced in CME, so probably is roughly 98, 98.2 on other exchanges. So if price was to have a pullback over the weekend, I will say it will be really healthy and actually help on Monday towards doing another attempt above 100K. I personally don't want the price to start rallying. Of course, I always say the same. I don't want the price to rally on a weekend and leave gaps behind. We already have this 94.8 to 94.5 gap below the price. And I think there is a chance to fill it, but in order to fill it and take that liquidity from CME that hasn't been able to be filled because the exchange Chicago was closed at that point, over the weekend is also closed. So it doesn't make much sense for the price to come in here at 94.5 and then saying that we managed to close the gap. I don't remember having seen a situation like this in the past that actually played out in the sense of coming and filling the gap during a weekend. I know many people wonder the same question. On the weekly, so far, we are doing partially what I want to do, which is to recover the level of 97.2, which was support and resistance. So if this weekend on Sunday we manage to close above 97.2, that will be really bullish actually. Large whales are doing precisely what they need to be doing, which is getting the big whale explorer indicator ratio to go towards the 0.5 ratio. That means that there is double the withdrawals versus deposits. We've been coming down from 115 and today we are at 0.56, and I think that is great. That is showing that the large whales are indeed accumulating. The ones that have been offloading is the people from the ETFs. Investors have been consistently having outflows pretty much since the 20th of December. And only yesterday we saw a big inflow. You can see in here 908, that was on Friday, which is really great to see. Let's see what's the effect of that in the chart. And you can see that it's not enough to put a new higher high. And indeed, that structure there looks like a bull flag, but we got 3 tops and each one is lower high. Not the most bearish structure, I will say, but just a moment of a slowdown. For example, all this impulsive move from 30K to 37K, if we undid all of that, I will say, oh my God, that looks very toppy for the ETFs, whereas this just looks like a bull flag, a slowdown that could easily resume any point in time. The upwards move, I mean. I insist, watch my video from yesterday. It was 40 minutes and it includes a lot more. I talk about Cerberus, the long-term holders, the monthly chart, the weekly RSI that hasn't really changed in any way, so you should watch that. Now going in depth with the liquidity pools, as I say, this looks to me very tempting. And now that there is no selling wall, the question is if the price starts coming back again against 100K, will the order book remain looking the same? I mean, are they still gonna remove that selling wall or are they gonna bring it back in with the price coming back up? Impossible to tell, but I will keep an eye and let you know on Twitter, Telegram, or Instagram if you are following me on any of those social networks. The links are in the description. And there's been loads of scammers, so don't search for Trading Parrot anywhere because you're gonna find 100 different scammers instead of the real thing. And then they're gonna try to get you to sign up for things. If you're talking in private message with me, you are not talking to me real. You're about to get scammed. That's obvious. If you are being scammed, please do me a favor and take the piece of them. Make them suffer, make them believe that you're gonna give them money, make them waste some time and then still report them. Thanks so much if you can do that. It's really annoying that they're bothering my community. Anyways, let's go back into topic. This is the delta, and as you can see, we are again almost touching that level of resistance. And every time we do such a thing, we become very careful with the longs, okay? For example, in this area in here, I say I'm taking a long, but indeed I wait for this level to enter my long, and I managed to enter at 91 point something, and now my position is in profit, but I'm being very careful with what's going on in here, particularly if we see a breakdown of the longs that could bring later another buying opportunity somewhere in here. I really don't think that this is gonna flash all the way to the bottom of the channel. I'm more inclined to see somewhere in here an opportunity to buy. Another consideration I was noticing this morning is that the channel tends to be to the upside. Like for example, in here and here, and now we've been in a downside channel for quite a while. So I'm wondering at what point is this thing going to break out and start building again a channel to the upside? If you're watching consistently the videos every time they go out and you have a mental picture of where we're going, eventually, maybe in February or March, we're gonna be in a channel to the upside and we're gonna be remembering the time we were in the downside. So let's keep an eye for that potential breakout putting a high that is beyond the resistance line. And what that means for us is that every time we hit the trend line, there can be a sell-off, but at some point there won't be one. At some point we need to be prepared to get disappointed with the pattern because it will just go beyond that and start building a channel again to the upside. That is just the nature of how longs and shorts are constantly changing dynamically. And the delta from liquidations is showing us a level of 555. That's pretty elevated, and that contributes to the overall risk of being in a long at this point. I'm trying to say that pretty much every day we're increasing a little bit more and a little bit more the risk of not closing that swing trade. If you want to ride it for very long, make sure that you have some sort of trailing stop loss, because with 500K of cumulative delta, there can be decent pullbacks. Let's see what the ask versus bid liquidity is saying. You can see that the area that yesterday we were seeing in red ended up having some downside, but just 1.78, and we continue to see a reduction in terms of the ask liquidity. This means that the longs continue to step in, increasing the liquidation of them as well, and the risk of entering in here in long is a lot higher than at the times where everybody was looking for an entry. Now everybody is in the red in here looking for an exit. That is reducing, which is meaning that less people want to sell, but is still in the red, and it might stay there for a little bit longer just because we are approaching 100K. And if you didn't watch my video yesterday, I think the most important takeaway for me is, if you're like me and you are in a long hitting 99K now, we need to know two things. There is immediate liquidity above the price. So there is an option for price to continue, but there are no certainties in trading. Therefore, my strategy takes in consideration that in here, there is a decent pull to get the longs liquidated. So you need to make a hard choice in here because there are no certainties. Do you close your long in here and potentially miss out on additional upside, that there is that additional upside, and basically say, okay, I'm done with this elevated risk. There's just too much risk. Or you have additional cash to buy the dip at this area. Personally, I have orders in here and I have orders below 80K. So if this fails and does something like this, I'm good to go. And if it fails and it does something like this, I'm good to go. Of course, it's going to be a little bit more sweaty for me if things go all the way to 48, because that will be devastating, I think, not just for me, but for everybody. And that can happen only if the general markets have a disaster situation. I'll cover a little bit of general markets again today, but if you are interested in that and you want to see it more in depth, watch my video from yesterday. Liquidations on the top are higher or larger at 99.8, the 102 to 103 and the 105 are all still there. The proportions are showing us that those are larger than to the downside, going to 91K, but this is just 30 days. We see something slightly different when we look at trading different. You can see that the short term in here is showing us 100K, and then some levels below that are not as big as that. 91, it is big, but not as big as 101, as 100. And we haven't overcome 100K, so the setup of the triple bottom in here, targeting 108, is still not in play. I am hoping that if we have a breakout like this, is on Monday or Tuesday, not over the weekend. It will be a shame to get just here and then opening on Monday and having to come back to fill the CME gap, and then having to do something a lot more weird and difficult to follow if we do such a thing. Or even worse, coming in here and then having to go for 94K to fill the previous CME gap and then go up. Well, unfortunately, you can just wish for what you want in price action, but you cannot really control it. So we are going to have to trade whatever we get. In general markets, dollar managed to close below 109, just roughly by 1 cent. And if we focus now on the closing levels of the RSI weekly, which we wanted to see a closing below this high, so we can talk about a potential bearish divergence incoming. But what we got is this high is 69.98 and this high is 70.02. Therefore, there is no chance that we talk about a bearish divergence. What we can talk about is a double top in here, just because those levels are very similar. And if eventually this becomes a pivot, we can say, okay, double top with higher highs. Yeah, that is something. But it would have been nicer if this closes, let's say at 67 with this high price in here. And then we got an option to start seeing a bearish divergence and some erosion in this move that has been just incredibly strong from 100 to almost 110, 10 points on the dollar. Crazy. Dollar closed below all the highs that you have in here, all the closing prices in there. That continues to be bearish for dollar. VXY, the volatility index, closed at a low, showing that it's having some cool down and allowing Nasdaq and S&P to close in the green. Remember that Nasdaq, we have a high bearish signal, and so far out of 2,000 points, we have done 800, getting close to half the full target of the signal. Let's do a wrap up. I am in my long, in my swing long. I enter at 91 point something, and I'm gonna keep it open in the lookout for potentially hitting a low in here, maybe becoming a spring. Not guaranteed that we do that, and that's why I'm just gonna keep my long there untouched. If we start going into 104 and we continue, I just continue to ride it. I will let you know if I wanna close it. If we go in here, I'm prepared for that, and I'm prepared for this. If we don't get it, it's fine too. If you're not in a long, will I enter where we are? No way. No way in here I'm entering in a long. We just have 4 candles up on daily. We are in the pivots. This is a decision time. We got liquidity below quite heavy. And let's face it, it's just 8.5K close to the price, whereas the red in here is 16K higher. So there might be a little bit of additional time to get there. If tomorrow we pump and we go to 118K and you didn't take a long, take responsibility for your own actions. This is what I'm doing. So if I don't make profits, I don't have any responsibility on you making profits. It's all your call. You are an adult. And if you aren't, your parents shouldn't let you be watching this channel. And yesterday I talked about the monthly on BTC, and I really find weird this call that being above 70 should be just 3 months. That is what the linear regression is saying, but I find really weird that in this particular cycle we don't get any green on the RSI, because if this 90 days is all we get, we will literally finish a cycle without having any decent move on the RSI, neither on the volatility. And you can see every cycle there is like 2 tops, 1 and 2, 1 and 2, 1 and 2. So if this is the second push up, why is it so mild? And if it's about to finish in just 1 month, it's quite disappointing in my opinion. I will expect it at least to get into 76, 75 at some point. But that's just my bias, that's just my opinion. Let me know in the comments if you also think that we deserve a little bit more. Of course, Bitcoin doesn't care about what you deserve or not. Indeed, it punishes most of the people. Most of the people lose. And the SOPR on Bitcoin is touching the lower band. I really don't understand why we're getting this read. This is typically happening when the price goes down. Like for example, in here, you get this drawdown, and it means that lots of people are closing their positions at a loss, okay? The lower this band goes, it means people losing. So the only explanation I have, apart from saying that the source of this data for the SOPR might be broken, is that people enter on positions in here on the breakout, or maybe in this area, and many of that people that enter in here have waited for this push up to close their positions at a loss, because this level is closing positions at a loss. And the theory behind trading SOPR which stands for spend output profit ratio, is that when people close their positions at a loss, it tends to mark a local bottom. When they close a lot of positions in profits, it's a distribution and price tends to mark a top. So there you go. That is getting very close to too many people relative to the past moves of the oscillator version of the SOPR that I built, calling for a local bottom. Crazy, because after a move from 91 to 99, I struggled to find an explanation. Let's see in the upcoming days if that plays out. Guys, if you want to trade Bitcoin or Ethereum, altcoins, hundreds of different altcoins, have access to pretty much all of them. My two preferred exchanges to do so in combination, actually having access to both, is Bybit and OKX. They complement each other very well. If you look at the whole list of all their listings of altcoins combined, they have like 500 different altcoins. And if you open an account on either of them using the link in the description, you can claim 30,000 rewards on Bybit, 60,000 on OKX, getting the lowest fees to trade. They do require KYC. So if you want to go with non-KYC and not have to go through the hassle of that, I have two exchanges. One is Bluffin, the second one is 2bit. I will say give a try to Bluffin, install the app, see if it's asking you for VPN, and if it's not where you live, you're good to go. This is a great exchange. I'm currently using it for trading. I have 3 accounts at the moment with different emails, non-KYC, and I'm able to withdraw, deposit crypto, do whatever I want without a VPN. If where you live, you discover that they require VPN, then maybe you can skip Bluffin and give a try to 2bit. Once you confirm you don't need VPN, then you do the deposit and you can start trading and claim one of the bonuses that I'm showing you on the screen. This really helps supporting the channel if you decide to do that. If you already have one of these exchanges and you want to move your account, your KYC, or anything to one of these exchanges, I will really appreciate it. Thanks so much for watching. I'll see you on the next one. Bye bye.